Hi, welcome to Forex Trading Tutorial. In this video we're going to be looking at how we can record our trades on an Excel spreadsheet and how we can use that information to work out whether or not our trading system will be profitable going into the future. Okay, so where we are at the moment is, in our previous video we looked at recording our trades, and at the time I decided that I was going to do a buy trade, and I believed that this was going to, this line here, the 09425, was going to provide support. So just to look how the trade is carrying on, just click here. This is the actual live trading of that. So we were here when we took the picture, and as you can see it's kind of bumbling along the level of support here, so it may go up, it may go down, but obviously we've got a stop loss in there, so we'll see where that goes. One of the things that we need to do is, once we've decided to close out our trades and we've recorded our information, so again we've recorded whether or not we had a profit or loss, it's very easy to work out how much money we won or lost, just purely because we can have a look down here in our profit and loss, and for each trade that we do, it'll actually just tell us how much we have won or lost, and that just makes it very, very easy for us, because all we need to do is just copy this information here onto our spreadsheet. So I'm just going to bring a spreadsheet that I've already completed. So what we have here is we just have a spreadsheet, and all I've done is I've just put profit, trading system profits in, and the losses from the trading system. Let me just move that over slightly so you can see, and then what I've got down here is I've just got the numbers here, so it doesn't correspond, it's just, so we'll use that to work out the numbers of trades. So what you do to work out whether or not you've got a system that makes money is you just need to record each trade. Did it win? Did it lose? I just do it in columns, just mainly because I need to keep them separate. So this trading system here, and this is actually a trading system that I've just taken from Zulu Trade. I've just downloaded this information. You can get it on an Excel spreadsheet. So I'm just using it as an example of how you would do it yourself. So for example, in this case, the system won 104 profit and lost 48 on that trade, and then every trade is recorded. And as we go down, you'll see that there's quite a lot of trades been made by this system. And to work out our expectancy, we need to have quite a lot of trades. I mean, I would say minimum 50, but 100 is better, because we want to know what the trading system is going to be like. And if we just use a small number of trades, what we end up with is a system where we may get biased results, just purely because we may just, if we were trading 30 trades, we just might be lucky, we just might win 30 times or very close to 30 times, and we may think, fantastic, we've got a trading system that wins. However, when you work over a longer period of time, the true expectancy and the true average of the system will come out. That's why doing it over a larger number of trades is much better. And all we've done is this, you would just record the wins and losses in an Excel spreadsheet, and we need to carry out, and we need to work out two things. One is the average win-loss ratio, and the other one is a win accuracy, and I'll show you why we need to do that. So if I just bring up my website here, so what we've got here is called the expectancy chart. And on the expectancy chart, and what this tells us is whether or not our system will make money or not, and that's exactly what expectancy means. If you have a positive expectancy, your trading system will make money in the long run, because it's biased towards it wins more than it loses. And if you've got a negative expectancy, it loses more than it wins, which means that over time, say you start with a $10,000 account, over time with a negative expectancy, however much you trade and however much you may well get some success, over time you will lose money. And with a positive system, it's the reverse, you will win money. So the easiest way to do it is just click on the chart, and what comes up here is the expectancy chart. Now this is very easy to do. You just have a look at your winning accuracy, so percentage of winning trades that your system makes, and you just cross-reference it with your win-loss ratio, and you'll be able to tell from here whether or not your system makes money. Now anything with a minus sign in red is a negative expectancy. Anything with a positive black is a positive expectancy. So going back to our spreadsheet, what we have here is we have an accuracy of 87%, and we have a win-loss ratio here of 1.7. So going back to our thing, so it was 87, so I always go to the one below, so that's 85 is the closest one below it, and we move along, we move along, we move along until we get to 1.7, and there we go. Here is our thing, which is 130, and this is in percent, so it's 130% expectancy, which means that this system is robust and makes money over the long term. So if you'd have put it in your own trading system and come up with the same results, you could be very, very comfortable knowing that your trading system makes money long term, which means that you're doing something right. And as long as you're consistent with your trades, you'll make money. So this is how you read it. So let's go back and show you how you work it out. All I've done is very, very simple, and I'll show you the, when I click on there, what you'll have is you'll have the formula come up here in this bar, and I'll hold it on each one for a little bit just so you have a chance to pause it and you can work it out on your own spreadsheet. But it's really, really simple. What this is basically this column here added up. Now I just want to just let you know that because I've put profit and loss here, obviously we're not going to include these into the calculation, so I'll show you that now. So if we scroll down, the next part here is the number of trades, which is 621. And if we click here, it says 622. So 622 minus the 1 for this bit here equals 621. So all we've done here is we've done this column, and it's just for Excel, it's just the sum of, and we're just adding all these up and we add them together, and then that gives us this figure here. This figure here is just with the minus figures. With Zulu Trade, it automatically puts a minus on there. So what I've just had to do is I've just had to convert it. So all I've done is I've just taken whatever the result is here, and again it's just the sum, and again we're looking at 89 rather than 90. So all I've done very, very simply is I've just rewritten it. There's no formula in there. I've just typed whatever that is without the minus sign. But if you're going to just write your losses, you don't have to put the minus sign in. You can just you know it's under losses because it's under your losses column. And all we've done here is the 621 is the number of trades taken in this column, and 89 is the number of trades taken in the losses column here. So all we do here is we just click on here, and as you can see, we've just got this figure divided by this figure, and this is what it equals, which is 535.28. And again on this one, we're just doing this top figure here, which is the amount, the total amount of money divided by the number of trades. And now this is giving us the average trade, average loss per trade. And then just to get our win-loss ratio, all we're doing is very simply is we're just dividing this one by this one. So it's just again equals this cell divided by this cell equals this cell. So then that just gives me my 1.74. And if I alter any of these figures, it will automatically change. If I show you, if I was going to add another one in, as you can see, it's just changed. But that's just, obviously once you put the formula in, it just means that you can add things to your spreadsheet and it will very easily recalculate these things for you. Okay, so we've got our average win-loss ratio, which is one of our information that we need. The next bit of information we need is our win accuracy, and all I've done here is I've just done this figure, which is 621, plus this figure, which equals 710. And to work out the winning accuracy, remember this is our win column here, all I've done is this column divided by the total number of trades times 100, and that just works it out into a percentage. So that's given me my 87%. So as long as you follow these formulas and you can pop them into your thing, it'll all work fine for you. And again, this is just for recording your trades. It's one of the main reasons why we do it, because otherwise when we learn to trade manually, what we need to do is we need to find a system that makes more money than it loses, and then consistently apply that system. Now when we first start out, we do not know that we need to do that, so what we do is we just try and we just say, well, we'll go on my gut, this looks like a buy, this looks like a sell, and we just end up losing all our money. And you know, we want to become better traders, and the way we do that is by recording our trades. Now the reason why we've recorded it is so we can basically have a record of how we trade, and then we can go back in the future and have a look at how our trades and all our decision making, and we can become better traders from it. Also what we can do is use this information to create our results, which then means that we can then check it against our expectancy, and we can know, say for example we wanted to trade an RSI indicator, and we thought, well, every time it's oversold or overbought, we're going to then basically enter the trade. And we do that consistently. We can then, every time we do that, we can record our trades, we can see how much money we won or we lost, we can enter it into our spreadsheet, and after we've done about 50 to 100 trades, we can then run it through, do the calculations, we can then check against the expectancy chart, and we can see whether or not that trading system, with ourselves actually trading it, will make us money. And then that way it's a really good visual reference, so we can just check here very, very quickly, am I on the right track? Now if we're in the red zone, we're not on the right track. We either need to change our trading system, or we need to be more disciplined in how we're applying our trading system. So if we know the trading system works, it may well just be our execution of that trading system that's letting us down, but the numbers won't lie. So and to be honest, we're better off knowing on a demo account whether or not we're going to make money or lose money. So this is how you use an expectancy chart. And just to get back to the website, all you need to do is just go back, and that will bring you to the manual trading expectancy chart page. I just want to show you the manual trading systems that we have in. What we have here is we have two trading systems to show you. One is Forex Mentor Pro. Now, if you haven't already chosen a trading system to use, and you're looking for a trading system that has a positive expectancy, then Forex Mentor Pro will be good for you. What it does is you'll be able to follow live trades by your Forex Mentor. They will be able to tell you their trading system and then show you videos of them doing live trades, and you'll be able to log in and you'll be able to follow the trades for the day. And that just allows you to get used to following the system correctly. You know it makes money in the long term, and that just allows you to have a basis and have a system that makes money, and it saves you having to work one out yourself. The other way to do it for people who want to actually do their own system is a simple Forex tester. Now this is just a simple program for MetaTrader 4, but what this does is it allows you to use historical data, and it allows you to fast forward and rewind the market, so you can actually trade the market as if it was live, but do it in a very, very fast and compressed format. So you might be able to do 2 days, 3 days worth of trading, but do it in an hour, because you'll be able to choose a thing, choose a trade, make a decision, write down what you're going to do. You can then fast forward the time frame, and so then you can see where and what results you got, record your trade, put it on your spreadsheet, do it again. Now what that means is that you'll be able to test the system. Instead of taking 3, 4, 5 months to make sure that you've got your 100 trades, you can do that in a week. And that's one of the advantages, and also it's good deep learning, which means that you're making decisions as if you were trading. So that's the two things I kind of put in my manual section. One is for real beginners who want a system that makes that we know that makes money, and for those people who want to be able to create their own, then Simple Forex Tester takes all the guesswork out of it. You can then do that, you can write your spreadsheets up, you can record your trades, you can see where you are, and then you just come along after a week's worth of testing. You can come along, you can put it into your Excel spreadsheet here, and then all you're then doing is just to get to your expectancy, you just click on here, click on the chart, and then you'll have your Excel spreadsheet, which will then tell you, you can check along, you know what your accuracy is, you know what your win-loss ratio, therefore you can then say, is that system that I'm following, is it going to make money long term? If it isn't, you can then tweak it and change it. If it is, you can be confident, then you can move on to live trading. So that is how you record and why you record your systems. So I'll speak to you in another video. Thanks a lot.